And that is all. So first of all, if you are opening your Bybit for the first time, it probably will be showing the light version, which is this first one. Okay, so but I recommend you use the Pro version. You can see at the top, you see this is the Pro version of it. So use the Pro version. And if you've not deposited before, you can buy through Peer-to-Peer. If you don't know how to buy through Peer-to-Peer, I can help you buy the coin and send to you. Just send money. Or if you have someone that can send you money, USDT per se, not BTC, USDT. But if you have BTC, you can convert it to, if you have BTC rather, you can convert it to USDT, because that is what you need to trade. You need USDT, not BTC. So first thing, once your money gets to your listing, you look at the bottom here, you see assets. Under assets, once you deposit money or any way money comes into your wallet, it first of all goes into your funding wallet, which is this first one, your funding wallet. So you need to transfer the money from your funding wallet to your unified trading. That is where the money has to go to. You go to transfer here, and you can see it's loading. Funding wallet to unified trading account. Since it's USDT, you change it to USDT. Your total USDT in your funding wallet will be showing here. I've transferred my own, so it's showing 0. You just have to put the amount you want to transfer to your unified trading account, and you confirm it, and that is how that goes. Then you come to the bottom side, you see home, markets, trade, earn, and assets. You come to trade, the center one. Under trade, because when I drop the trade, I will tell you the name of the coin. So you come to this where you have the name of the coin here. Here, this one is Manta USDT. So when I drop a trade, I'll tell you the name of the coin. So coin we are trading. So you come here and search for it. You write write the name. For example, if you are saying BTC, for example, you type BTC here. You can see it will show any coin you search. Make sure you choose the USDT Perpetua. That is the one, USDT Perpetua. Don't use USDC or whatever they say. USDT Perpetua. Any coin you search, that is one active contract. You click on it, so it shows here. The first one is you have your isolated here. If you click it, you see isolated and you see cross. So I always advise you use isolated, because when you use isolated, if you are trading with $10, if anything happens, it's the $10 you will lose. But if you put cross and maybe you have $100 in your account and you want to trade with $100, if anything goes wrong and you are getting liquidated, you are going to lose the whole $100. So this isolated helps you to maintain that, telling the market that this is the amount I'm trading with. So it will be registered that even though you have $1,000 in your account, as long as this trade you place it with $10, it's just $10 that is involved in this market. The other balance is not part of it. So that is why you always use isolated. So come to isolated, you see where we have this 100x. That is our leverage. So when you click on it, depending on the coin, they have some have up to 25, some have up to 50, but Bitcoin is up to 100. So you choose, like I always drop, it's always 10s. So you change it to 10s. You see where we have limit. If I click on the drop down arrow here, you see limit, you see market. So this is the difference between the two. This limit, if I place a trade and I put limit order, so make sure you change here to limit. If I put limit order, I will put the price. What it means is we are buying a particular asset at a so price. That is why we are using limit. But if we are using market, that means we are buying it at the current market value, the current market value of that asset. That is where we are buying it. So if I drop a trade and say market, when you come here, you change it to market just like this. But if I drop it and I put limit order and I put the price at which I want us to buy it, because that must be there once I put limit order, you will see you change it to limit. Okay, so assuming I put a limit and want to buy BTC at so this is the price we met it. So using limit means we want to buy it lower or higher. So let's say, because the reason is the price is not there yet. That is why we are using limit. So we will now put the price so that once market gets there, it will buy from there. That is the essence of limit. But if we are using market, that means we are okay with the current price of it. We just want the market to trigger at that current value. That is just the simple difference between the two. So for example, I'm using limit. Here you see price. You put the price, because if I put limit order, I'll put the price at which I want us to buy that asset. You put the price here. For example, let me say 15,000, and you come to TP/SA, that is take profit and stop loss. You click it, it will mark and it will show the boss. You put the price I will put for the take profit, which is TP. Put the price, let me see, 17,000, because it has to be higher than the entry price. Okay, then stop loss has to be lower. You put it as well. Let me just say 14,000. Put it. So after setting all those, you come here and you drag this arrow. As you drag this arrow, it will be reading from your capital. It will not show, nothing will deduct yet, but it's just telling a particular percentage of your capital as you are running it. Then after you've done that, you come to click on your stop loss to see, because it will indicate how much this trade will cost you. Okay, it will show you how much the trade will cost you. For example, you can see this is -$1. Take profit $2. So which means if this trade goes against us, we are losing $1. But if it goes in favor of us, we'll make $2. So that's just basically what it shows. So if you have, depending on the amount you have, as you are setting it, putting this here, you click on your stop loss, it will tell you how much you will lose for that trade. You get, so you will know the risk level you want to take and what is okay for you to risk for the particular trade. After putting all that, you just have to click on long or short, depending on the signal also, because if I drop the signal, I will tell you whether we are longing or we are shorting. So after you've selected all those things, if the signal is long, you click on long. If it's short, you click on short. And it will show here as an order that is waiting to trigger. But if we are using market, that means once we put all the value, check our stop loss and click long or short, the market will trigger automatically. And that is just it. So another thing is, in case if you go to your trade and maybe it's showing spot, because if you look at the top here, you see convert, you see spot, and you see futures, you see options, and you see trade file. So you always change it to futures, because most times when you click on trade, it might be in any of them, but for the trades you'll be taking, it's always on futures. So change it to futures before you do all that. Don't mind all the other thing here, they are not relevant. This one is just like the leaderboard showing the price. Here is reading the price. This one is for sellers and for buyers, just like the other board. People that are buying and people that are selling, it's telling you that also people are placing trade. It won't tell you the name of the people, but it's just telling you orders that are running in the market. That is what this thing is. Okay. And yeah, I think I've basically explained everything. This is your leverage and this is your isolated. Always choose isolated. Your market or limit. Forget I don't go into the other many details or this one. Just limit and market is what we need here. Your entry price, that is the price you want the asset to buy if you are using limit. Stop loss, take profit. Your stop loss to know how much you are losing for the trade if it goes against you. And that is just it. So the essence of always using a stop loss is to avoid situation of loss. Because as we are using our leverage, what leverage simply means is, if I have $10 and I want to risk $10 and I am using a leverage of 10x, that means the position I'm going to enter is just like I'm borrowing extra $90, because it's going to be 10 times that leverage I'm using. So my $10 times the 10x I'm using, that is 10x. Whatever amount, if it's $100 I'm going to that trade with, and I use 10x leverage, that is 100 times 10, that is 1,000. So there has to be a particular margin. That is what they call it, a margin ratio that I have. It's just like a collateral that will cover for that particular trade I'm going. Once the market goes to a point, goes against me, if I'm not using stop loss, where my margin, my collateral cannot carry the risk involved, I will be liquidated and my money will be gone in that trade. So to avoid that thing from happening, that is why we always use stop loss, to minimize our risk, so that whatever happens, if we say we are going to lose $10, if the trade goes against us, it's $10 and nothing more. If we say we are risking $5, if the trade goes against us, it's $5 and nothing more. That is why we're always using stop loss. So whatever trade you take, make sure you always use a stop loss and your take profit, so that whether you are there, you are not there, once the trade has triggered, it can do whatever thing it wants to do, and you are rest assured that the remaining balance of your account is not at risk. So that is just basically it. If you have any other question, please ask in the group, and make sure you watch the video and ask all your questions if you have anyone. We'll be going more details about basically how to analyze the market.